Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shalbat Nagar, and this is Market Today, a show where we'll help you understand the closing action on the day's trade. While both the Sensex and the Nifty are now trading at the day's high, you can see 133 point of a jump on the Nifty. 24,250 is now with us. 24,265 is the current level. All the sectors of the Nifty have pulled up into the green. Barring just flattish trade with a negative bias on PSU banks, but the banks have started to perform, especially the private ones. Financial services have started to pull up as well. You have strength gaining ground as far as the IT space is concerned. That's about 0.8% higher in trade now. Realty definitely is outperforming with 2.5% uptake. Consumer durables up by nearly 2% as well. Even the broader markets are doing well now. You can see the small cap index also inch up higher by almost 1%, and the pharma space continuing to gain strength as well, about almost 1% uptick right now. When we talk about the top movers on the Nifty, you have stocks within the cement pack clearly as the ones that are gaining strength. So Ultratech Cement up 4.5%, Apollo Hospitals, Grasim, Shriram Finance and JSW Steel as the other stocks that are doing pretty well in the closing hour of the trade. Now when we look at the ones which are not performing, you have the insurance-based stocks which are on the back foot, HDFC, SBI Life. You have NTPC, IndusInd Bank, HUL and Cipla as among those stocks that are seeing some profits being taken off right now. Good afternoon, Shell.
Good afternoon, ladies and gentlemen. What is playing in the market is a cut in the CRR. This is most likely outcome of the MPC, the Monetary Policy Committee meeting that is ongoing, and what will happen on Friday as far as the RBI credit policy is concerned. Look at the kind of sectors that are moving. Remember, today's rally comes after a disastrous second quarter GDP number at 5.4%, which is the slowest in 7 quarters. The entire market is of the view that the government and the RBI will now get together to do something critical to get out of this mess that the economy finds itself in, and the best it can do and easiest thing it can do is to cut the CRR. Therefore, the top performers are cement companies such as Ultratech, Grasim, Shree Cement, JK Cement and Dalmia Cement, and of course the entire real estate pack is moving. Look at Macrotech developers, look at DLF, look at Prestige Estates, look at south-based companies such as Shobha Developers, look at how the moves are coming into smaller developers such as Prestige. So this is the theme that is running in the markets. And look at how banks are performing. Look at the Nifty PSU banking index. At the moment, this index is trading at its day's high, and a lot of PSU banking stocks and other banking stocks are also doing pretty well in the market. When we had started today's program, I had mentioned that all 10 super index heavyweights were in the red except for Tata Motors. Well, now you have speckles of green all abroad. You have Infosys 1% higher. Look at the banks. ICICI Bank 8 rupees higher. Axis Bank 3 rupees 50 higher. Look at how SBI and HDFC Bank are doing. They are doing pretty well in the market. And of course, when you look at in the deeper space, in the banking basket, you will see the Nifty banking index up 92 points. This is also showing signs of strength. But Indian Bank 1.4% higher. Look at Punjab National Bank, 1/3% higher. Strong gains in Bank of Baroda and Canara Bank. So it's the CRR rate cut that is most likely an event that will happen on Friday, and that's getting priced in. Nifty 500 was actually in negative territory, but now sort of 138 points higher. Look at the advanced decline at the moment in the market, and you have about 1600 shares in the green versus 800 in the red. Early morning it was the reverse. It was the bears that were on the front foot. So a strong start for Monday, and that's really good at a time when there is crisis all around, and there is expectation that the government will get its act together in terms of spending, lower borrowing costs by cutting the CRR, and then let's see what's happening. We'll also welcome Kunal Rambia to the conversation and find out his best performing cement stock. Good afternoon, Kunal. What looks good?
Good afternoon, sir. Good afternoon, Sakshi. So when it comes to Nifty and Bank Nifty, as sir rightly mentioned in the morning, it was more of the bearish kind of mindset and the trend. But as of now, it looks very good. It's trading near to the day's high, and the indices are doing really good. Overall, the trend remains sideways on the larger fronts. Now, when it comes to cement sector, the counters, the first counter which I like the most is the event driven counter, that's ACC. After this massive correction on 21st November, this counter has come back in a big way, and it's trying to regain its lost territory. So considering the stop loss as I guess is around 2150, one can initiate a buy on this. Immediate targets can be 2385 to 2400, and then we trail the stop loss and hold the position. I think this trending counter, which is available still near the support itself, can be a good bet in the entire sector.
Okay, so that's as far as the cement stocks are concerned that are further gaining ground and the preferred stocks that Kunal has mentioned. Kunal, how about the real estate names? Of course, cement is a proxy play to the entire real estate demand as well, which we are continuously seeing surge. The real estate index is on course to be having yet another strong year after two consecutive solid set of years that we've seen before. Your sense of how should one be approaching this space now, and any key stocks that you prefer over the others?
So, Sakshi, if you remember, the previous week itself, we were discussing about DLM, right? And at
Yes.
that time, the counter was near to 810. The only argument which we had was that the trend is sideways and it has bounced right from the support level itself. And see, today it's showing the flag breakout, and today the counter is up by 3%. So, if even if today someone wants to initiate a trade, then with the stop loss of today's open price, that's around 830, one can initiate a buy on this, and the targets in the near term can be 880 to 885. That's the first counter. And the second is marathon, which I'm discussing with our viewers since quite a long time. Sideways consolidating counter trend is just positive to sideways. Right now, it bounced right from the support level of 560. It's trading at 598 with the stop loss of 580. That's 580. One can initiate a buy on that also, and the immediate targets can be 640 to 650. So these are the two counters which I'm watching out in the realty space.
Okay.
What's really happening in the markets actually is now the steel space, which is also coming up. Look at how the breakouts are happening on Tata Steel. Again, it's an important component of houses, and you will look at how breakouts are happening in the metal space. Let me just highlight a few metal stocks. Just a moment, let me just get this here into metals. Yes, JSW Steel is up 2.2%, Jindal Steel is up 1.5%, Steel, Jindal Stainless, Steel Authority of India and Tata Steel, all of them are rising with a strong input as far as open interest is concerned. Look at JSL. This is a new entrant into the steel space, and right at the very start of the expiry, open interest is up 1.60%. A view, Kunal, on JSL, Jindal Stainless Limited, 670.
So the trend on JSL was very, very strong till around March and April of this year. Since April, this counter is in sideways consolidation. The only attractive part of this counter is that it has not made any fresh low since last 8 months, and the support consistently is at around 640 levels. Just couple of days back only, it made a low of around 650, and right now it's trading at 690. So yeah, with the stop loss of 665, one can initiate the position. And now, in this case, we will not keep the target, which is very, very short term. We will go little positional, and the targets can be 750. That's considering last 4 months consolidation again, and not looking at 9 months consolidation, just 4 months consolidation. Targets can be 750. That's first counter. And the second is, of course, our Jindal Steel also.
Okay, so that's as far as the metals pack is concerned. Let's also look beyond the construction space particularly and go on to one other space that's been garnering a lot of attention, and that's the pharma space, Kunal. Over the last week or so also, we saw stellar moves coming in, and that has continued even today with newer names getting added into the list as well. Your sense of how should one be approaching this one? Any key stocks that are on your top radar where you are consistently adding fresh positions maybe?
So I'm very comfortable trading Sun Pharma since last 2.5 years. The only reason being it's a trending counter, and every decline is a buying opportunity. In fact, if you look at Sun Pharma's behavior in the last 15-20 days, the extreme bottom was seen on 19th November and the low was 1730. The same bottom was seen on 28th of November again, where the low was 1723. This after this double bottom confirmation, the counter is now showing the breakout. So with the stop loss of 1775. 1775, one can initiate a buy on this, and the targets can be 1850 to 1900 kind of level. So Sun Pharma is the most preferred counter in the entire pack as of now.
Okay. Sun Pharma is the preferred space then. Okay, we'll look at that pharma space. How about the hospital space also along with this? How are you looking at an Apollo Hospitals right now vis-a-vis some of the other opportunities? Apollo has already moved also quite a bit. So should one stick with the momentum there, or do you think the second rung names will also appear more attractive now?
So that's the only counter which we actually look at in the hospital space,
Okay.
and that's Apollo. Look at the consolidation of last 3 to 4 months. The counter has consistently made low of around 6700 to 6800 kind of levels. In fact, today's low was also around 6820, and right now it's trading up by around 3.5%. But it's sideways consolidating now because it's near to the resistance. I would just wait for a couple of days. Let it give a closing about 7175 or 7200 levels. I think with that breakout, one can certainly buy. The targets can be 7500 in that case. The trend is positive. It's been 3 months of consolidation. So either buy near support of 6800 or buy above the breakout of 7200 makes sense.
Okay. Let's also shift focus and look at outperformers in the markets actually. While we are rejoicing the 158 point bump up on the Nifty, but remember today's volumes are not there. Reliance has only traded 1081 crores worth of shares. HDFC Bank has traded 982 crores worth of shares. ICICI Bank about 918. It's the other counters that are hogging the limelight. Look at Adani Green. Today transaction volumes are almost 2500 crores. The counter was up 8% in the morning, but now up just 0.5%. Dixon and Ola together have 2100 crores on Dixon, and Ola is about 1327 crores. Then you have CDSL, you have Premier Energy, you have Inox Wind. In fact, the other underlying theme in the market is the renewable space that is doing very good. Look at Premier Energies 1.1% higher. Look at Inox Wind 6.3% higher. Vari Energy 1.9% higher. Suzlon is in the green, and NTPC green up 3%, and of course Inox green up 15% in early morning trades. So a renewed focus on renewables is what the market is doing. Apart from that, the wealth space is doing well. CAMS we've discussed. CDSL is showing strength. Aditya Birla Financial Services, ABSL is also doing pretty well. So these are broader themes that are running into the market, and 24,300 is now within reach. Let's look at the points contribution that is coming in from individual index heavyweights and see what's pulling the Nifty up. Infosys 20 points, ICICI Bank 18, Reliance 16, Ultratech Cement 14, and M&M 13. So each one of them is a sector leader from different sectors. Infosys from software, ICICI Bank from lending, Reliance from the diversified space, Ultratech is the biggest cement player, and M&M is the largest SUV player. So you can see that it is an across the board rally, not sector specific, that is pulling the Nifty higher. NTPC, L&T, HDFC Life are some of the names that are pulling the index lower, but that is marginally. 24,300 on the cards, ladies and gentlemen. You will probably see a lot of pent-up buying happening in the remaining 45 minutes of trade. Remember, today's up move is coming on a day when the market is reacting to the worst slowing GDP growth that has been seen over the last 21 months. Sakshi.
Okay, got that. So that's the view. Let's look at some of the other interesting names then. In fact, what we've been discussing since morning is how stellar a move has Dixon Technologies shown. It's the top mover within the mid-cap space as well in the broader markets for sure. And that's also pulled up Keynes Technologies and other EMS players also along with it. The focus is turning back onto electronic manufacturing stocks that were once, top favorites of traders as well. Kunal, how are you really reading into the kind of momentum that's getting generated once again after a base building exercise has taken place within these spaces? And do you think this will continue? More importantly, if one has to look at these stocks for to buy today, do you think this momentum will continue at least for some more time?
See, again, Sakshi, on this channel itself, I get the opportunity to speak for long term, and these are the counters which are absolutely trending. Look at Dixon Technology or say Keynes Technology. The trend is just been on, and they have delivered fantastic returns so far. So, in such kind of counters, we should always be waiting for some kind of correction where the price comes near support. We can always buy it. The strength is really high. The volumes are pretty good. So I will not chase the counters at this level. Rather, I'll wait for those lull period of time where the market comes down again. These counters come down a bit. We accumulate at that point in time so that we can enjoy such kind of days for us. Buying at this level will make our risk-reward ratio extremely unfavorable. So avoid as of now, but keep watch on these counters. I think looking at today's volume and the breakout, the momentum is likely to continue even further for at least one quarter.
Okay. Got that. So that's the view that is in fire on the EMS space right there. We'll keep an eye out on both Dixon and Keynes for the interim as well. The other important bit that I wanted to discuss with you, Kunal, is as far as even the broader markets, the mid and the small caps are concerned there. Slowly and gradually they are coming off, the lowest and the worst phase that they have had. Do you think large part of the froth is now done and dusted? Is this a good time to start looking at some mid and small cap names, considering the fact that there is a lot of effort from both mid and small caps to come back and participate in the ongoing bounce in the markets as well?
So yes, I'm very confident about the ongoing rally. The only reason being, if you look at the broader participation of these counters in last 4 years, it is still positive. In fact, in spite of such a massive correction which we saw in most of the counters, the trend remains absolutely intact, and this is the only time where a trend follower will try to capture the rally so that the risk-reward ratio remains extremely favorable. So, the counter like Kaveri Seeds, which we discussed previous week also, the counter was trading at 1200 and now it's available at 850, 890 levels today. In fact, today it's up by around 3%. But look at the recent bottom, that was 800 compared to buying at 1200. I'm buying at 900 with the stop loss of 800, and I'm riding the ongoing rally. Yeah, so these are the counters which I'm always, keen to accumulate in this kind of correction. And I feel that the trend which we saw just couple of months back, the trend which was positive, I think that will likely to continue at least till the month of February.
That's how it is, ladies and gentlemen. 2:50 now. We have about 40 minutes of trade left, and a very nice sentiment on the Lal Street. Sakshi and I track 19 indices for you. All 19 are in the green. Remember, when we last time checked this, about 10 of them were in the green and 9 were in the red. But buying reservicing at lower levels and providing very decent support. In the NSE 500, the broadest index that we track, 300 shares are in the green versus 200 in the red. That's a very, very big positive. Let me just mark record highs and volume breakers. That will be something wonderful to look at. Across the board, you have frontline names. Look at CAMS. Early morning high was 51.45. Now 3% higher, 5,075. Fresh record high. CDSL fresh record high 1692. It hit early morning. You have a strong move coming in on Suven Pharma 1360. The counter still in the green. Coforge 8773, and the likes of Dixon Technologies, KNS Technologies, Capley Point. So there is a preponderance of wealth companies from the financialization space, a lot of mid-cap pharma, and of course you have stocks such as Praj Industries and Naukri, to name a few. Naukri is going places today, 2.1% higher, 84.30. Sakshi.
Okay, we were talking also about the capital markets related stocks in the morning, CDSL, CAMS. There are others which have added on to the list in the momentum. You have Geojit Financial Services within the broking house space, that's up 5% now. You also have stocks like Motilal Oswal, that's up 3%, 361 WAM is up 2.5% as well. Nuvama Wealth is also up by 1.5%. The entire space amongst the NBFCs seems to be gaining further ground. Let's ask Kunal if you have anything specific that you are tracking within this space. Would you stick with the exchanges or would you go with the broking houses right now? How is it that you're navigating through these fresh moves?
Certainly, I like CDSL the most because of trend nature of the counter. But at this point in time, if someone wants to initiate a new trade, I think Motilal Oswal is well placed. MOSL is consistently, making the bottom near 880 levels, and that since October. It's been almost 2 months of consolidation. Counter is making curve formation now and showing the fresh sign of breakout even on the lowest time frame. So considering the stop loss of I think around 890, one can initiate a buy on this, and the first target can be 1030 to 1040. And above that, I think the new rally on the higher side till 1075 to 1080 is also very likely. So short term to medium term trade can be initiated on MOSL.
Okay.
Fine. Again, as I have said, this is the wealth generation space. Look at Anand Rathi. Look at Aditya Birla Sun Life, AMC. All of them are showing very good traction, led by, of course, CAMS and CDSL. We track about 22 brokers and AMC stocks and back-end service providers. Out of 22, 19 are in the green today. Led by Geojit Financial Services, up 4.7%. You have IndyCap Trading, up 4.2%. CAMS, MCX. A view on MCX, Kunal, as also K FinTech. What are the charts telling you?
Sir, NCX chart is absolutely trending, but what we saw was since October, this counter was in sideways consolidation. The attractive part of this counter was that during the correction, it did not show us the price correction. Rather, it showed the time correction. And now, in today's behavior, at just 2 days, it's showing the comeback signs, at least on the last 1 month chart itself. So considering the stop loss of 6,150, one can initiate a buy on MCX. I think this trend is likely to continue. Again, the first target on the short term can be the previous high, which is 6,750 to 6,800, and above that again 7,200 levels are also open. When it comes to K FinTech, the counter has already shown the breakout of 1150, but again the momentum is missing since last 4 to 5 days. If the fresh entry has to be taken, then I think the breakout of 1190 to 1195 will be the good level to initiate the buy with the stop loss of 1130, and the targets can be 1350 to 1400 levels.
Okay, got that. So that's as far as the capital markets related spaces, broking houses spaces are concerned. So keep an eye out on this entire space. Huge momentum being seen there. The other one space that we had pointed out, just one stock in the morning, but the entire space seems to be in the thickest momentum right now. Paper shares. It was Pudamji paper that was up about 17% right in the morning trade. Now you see Star Paper Mills, it's at a 20% circuit. Pudamji paper is at a 20% circuit. Mallu paper is at a 19% uptick, again a circuit on this one as well, 20%. Then you also have Orient paper, that's up nearly 10%. Genus paper is up 10%. all of these paper stocks are actually sharply higher in trade. What's going on here, Kunal? This fresh momentum that's taken place, I think day one of this momentum here across the board. How would you view this?
See, honestly speaking, I don't really track this entire sector. But if I look at the trend is absolutely strong. And today's momentum with volume, the prices are going up with volume. So yeah, I think that this momentum is likely to continue. So if I look at say Orient paper, I think the support was maintained at 40 levels, and today the counter is up by around 10%. So with the stop of 40, one can initiate a buy on this. I think there is no circuit as of now, so one can initiate a fresh entry on this with the stop of 40, and the target of around 54 to 55 is also looking very, very likely. But it's going to be positional, so one needs to just maintain the stop and hold the position till the time the target is achieved.
Okay.
2:56, ladies and gentlemen. We have now almost 34 minutes of trade left. So far, so good. At the moment, Nifty is facing selling pressure from call writers at 24,300, and that's the reason why you see it testing a bit lower. But all said and done, it's been a market of immense, how should I say, maturity at a time when most people are extremely bearish for the medium term. Today has been an uptick which has proved to be a good omen for the coming week, and perhaps tells you what the government and the regulator, the financial regulator, RBI, might be up to when it comes to the Friday meeting of credit policy. Remember, a lot of politicians, including influential ones such as the finance minister and as also Mr. Piyush Goyal, have been talking about lower borrowing costs, while inflation is very, very stubborn. Remember, last week's numbers were terrible. But what can be done is tweaking CRR that allows more liquidity to come into the market without cutting rates. So let's see what the RBI does. But a strong show coming across the board in many sectors. I'd like to mark some of them. Inox Green now 19% higher, 176. Look at how stocks are moving in this particular stake. Apart from Inox Green, look at the 7% uptick on Inox Wind. Suzlon is in the green. Premier Energies, the recently listed IPO, Vari Energies, as also stocks in the solar space are doing pretty well. 2:58, Sakshi, 32 minutes left.
Right. We'll thank you very much, Kunal, for being with us on this edition to share with us all your thoughts and ideas right there. And appreciate your time as always. And we'll hope that you have a great time till the time we see you next and discuss all these stocks that you've mentioned even today. Let's welcome now, viewers, another guest who will be joining us for the last half an hour of trade on the markets now. Prashant Tapsi, research analyst at Mehta Equities, is now with us. Prashant, welcome and good afternoon to you. Good to have you with us. Tell us what is it that is looking good in this current setup in the markets to you? Do you think, are you getting more confident with the way we had started off? It did not look like we'll be able to sustain, but we've moved to the high point of the day, probably shrugging those fears of the GDP shocker that had come in on Friday evening. What do you think will keep the momentum going now?
So everybody was thinking about a red opening and the full day would go in a red session.
Yeah.
The markets have turned green on the hopes of what everybody is talking about, the RBI meeting which is scheduled this Friday. Ignoring all the bad numbers in terms of GDP growth and in terms of sector which are almost 21-month low, which is very much negative. But it was really surprised to see how Nifty is getting more stronger and stronger, having a small hope of there will be some kind of positive sentiments from the RBI and the government. Even I think 15 days back, Nirmala Sitharaman has also hinted there is a need of an interest rate cut to support the growth as well as the cost of borrowing of a lot of corporates. If you have seen the Q1 earnings and Q2 earnings, which were almost disappointing, and now markets are almost near to the 15 to 20% down from the top. I'm talking about mid cap and small caps. So some kind of comfort levels are growing in terms of valuations, and then a hope of a good RBI meeting and pre-budget rally. I think markets are again coming back in action.
Okay, got that. So that's as far as the view is concerned. Before we go ahead and discuss certain pockets with you now, Prashant, there is this macro, number that we have to keep an eye out on, and that's the rupee, which is at a record low today. We've seen 84.7 being hit today, and this also comes in amidst a whole host of worries that are coming in from the US, the mother market, because Donald Trump, who will be assuming office very soon, is now already talking about how he is threatening about tariff wars and imposing 100% tariffs on the BRICS nations. That would include even India. And this, if these countries plan to move away from the use of US dollar in international transactions. Many of these BRICS nations have already expressed their viewpoints on reducing their reliance on the US dollar based transactions. Now, I want to understand, what are these tough statements really going to be doing to the rupee back home, and how is a weaker rupee going to really impact the markets overall, and any key pockets that will be most affected that investors really need to keep an eye out on and be cautious about too?
I think you rightly said Trump is using this as a negotiating instrument to make sure he will be ruling the world. The way how he has said to increase the tariff on China, Mexico, and Canada. And obviously, India name was not taken, but yesterday with the BRICS nation under pressure, saying that you should not go out of the dollar business. But obviously, yes, India is a great partner for US. It may not affect so much as other countries may get affected. I think even once Trump gets into the seat of the president, Modi will obviously have one first meeting of his newly elected president, and then he will be negotiating his own give and takes in terms of imports and export. Obviously, the most affected would be the IT as a sector, and second, pharma as a sector. But if you see today again, pharma is really come up with so strongly from the bottom levels. If you see Sun Pharma again, it is trading at a positive way. Overall, I feel India can be exempted in the the way how Trump is giving the pressure on the dollar as well as the tariff pressure. So India may get a benefit of advantage where the relation between America and US will help India to perform well in this pressure.
Ladies and gentlemen, these are all statements made by a person who is yet to assume the chair of presidency, and he is doing all that he can to sort of make the present incumbent, which is Mr. Biden, look bad. So 100% tariff and denial of markets in the US as far as Indians are concerned is going to backfire. Look at how Indian IT supports corporate America. Look at how pharma is primarily dependent on Indian drug makers. So this is all good to write on Twitter, but to deliver it requires a different level of understanding, and no such thing is happening. Nobody can put in 100% tariff barrier and then make his own economy uncompetitive. These are good things to talk about, but will they happen? Unlikely. Nevertheless, what is there is that the rupee is at a record low, and that's one reason why IT is doing so well, because 90% of Indian IT revenues come from the US and Western countries, all billed in dollars and euros. And ditto for pharma, 60% of drug revenue of top 5, 7, 10 pharma companies apart from Mankind are from the US geography. So all good told as far as our markets are concerned. That's another kicker. Let's speak to Prashant on his top pick in the cement space. Prashant, anything that catches your fancy?
I think Ambuja and ACC, these are the two picks, after the big correction in the, group, Adani group headlines. So these are the two picks which I am, comfortable to buy the, opportunity in the last 15, 20 days. So in these two sectors, in these two stocks, again, Ambuja is my favorite pick. I can expect around 15-20% momentum from at least 3 to 6 months time period, where I feel the margins are better right now, and the safety is higher in the Ambuja cement as a stock.
Okay. Right, so that's as far as the cement space is concerned, and we'll keep an eye out on this entire buzzing area too. 24,280 nearly, so we are actually holding up pretty strong in the last 25 minutes of trade. We've been talking about the auto space as well since morning amidst the mixed sales data that has actually come in for passenger vehicles, for two-wheelers as well, and for EV space too. Let's discuss a little bit on this space as well. Prashant, with you, how are you really looking at the auto space? What looks good to you? Between stocks like Maruti that have been buzzing today, M&M which has been in thick action because of its newer launches and renewed focus on the EV space right there. Tata Motors has actually been for a long time, hovering around 790 odd levels, not really gathering the strength to really move on. So these are the three pockets, and then we look at the two-wheeler space right there, stocks like Bajaj, TVS, and even Ola Electric for that matter, that's been very volatile. So reducing market shares there, of dip in sales, but at the same time expansion plans are booming, the kind of expectations that investors and shareholders have from Ola. Your own sense of how are you navigating through the auto move? Is it nearing the end of the slowdown?
I think yes, we are almost near to the bottom. The way how the high inventory pressure have kept all the stocks down from like almost 10-15% from the top. The sector is almost near to bottom. I think November and December, these are the 2 months where the high discount sales will go off, and the way how the recent auto numbers have almost mixed, wherein Maruti was almost 10% up, and other few stocks were almost 1 to 5% in terms of their month-on-month sales. But when we compare these things with YOY, I think there are a lot of still pressure seen. December can be 1 month again where volumes can increase, but that will keep pressure on their profits because of high discounts they are offering to their customers. Obviously, year end will be more higher discounts with respect to their loyalty customers who exchange their own brand with the own same brand. So I think the prices, I feel it has been discounted. Considering Tata Motors, Mahindra and Mahindra and Maruti, I am more positive on Mahindra and Mahindra right now. The way how they have revealed the two new EV vehicles, I think it is making a lot of buzz in the market. And second, again, I will be waiting more on Tata Motors again. A long consolidation from last 1 month, almost trading almost near 790, 800 levels. I think it is very much near bottom. A technical buy at this level can have a small stop loss of 760 and a target of 900 very soon. I think by January, if we get a good interest rate cut in the in the RBI meeting, obviously auto sector will be again the second best sector to get benefit out of lower interest rates. So I think overall as a sector, I feel near to bottom. Downside is very limited. Preferred bet would be Mahindra and Mahindra on the first scenario. Again, second would be Tata Motors.
Okay, so that's as far as the auto space is concerned. How would you look at the ancillary space? Even that is buzzing strongly in trade today. So stocks like automotive stampings, for instance, is up 15%. It's a very strong intraday move that we've seen on this one. Even Igrashi Motors is 7% higher. Subros, Setco Automotive, NRB Bearings, Remsons. You're looking at all of these stocks actually garner a lot of strength in the latter half today. What's happening here? Within the auto ancillary space as well? Any key stock that you like?
I think yes, both go hand in hand. Again, when the sales figure looks so neutral to positive, obviously the auto ancillary stocks will be in a better position where their sales growth can be anticipated for next 1 or 2 quarters. If these quarter month-on-month numbers were really bad, then obviously these stock would have been under pressure today. So overall, considering the flat growth of month-on-month auto sales, auto ancillaries are getting more preferred one. In this stock, I think Motherson Sumi would be a preferred stock for me. I think another 15-20% momentum can be seen at least for a month or so from these levels. So overall, I think even that sector is near to bottom.
Okay, 310. The last 20 minutes of trade are left, and we are in fine shape as far as markets are concerned during the day. I'll mark volume buzzers, those stocks that have performed exceptionally well on price and have also taken volume with them on the long side. Let's look at happiest minds, something that we don't discuss often, but was one of our favorite multi-baggers when it got listed. 769, 6.32% higher, and a very strong 9x volume surge. Inox Wind I've already marked. 4.5 crore shares have been traded, and remember, both Inox Wind and Inox Green are moving from 200 day moving averages. So this itself is a very strong move on the charts. What else would I like to highlight? Yes, cement. JK Cement 5% higher, 44.96. Volume is a substantial 3.6x, and of course stocks such as Natco Pharma, very strong move, 3% higher, 3 times the 5-day average in terms of volume, and Canfin Homes, 8 times the volume, counter down 1%. Sakshi.
Okay, got that. So that's the view that's coming in on these specific stocks. Well, Prashant, do tell us how are you looking at this renewed momentum in the erstwhile favorite pockets, the ones where retail investors have a large chunk of their money stuck for a long time now in this correction. Defense and railways, the bounce coming across the board yet again, order flows starting to come in for most of them, and we are seeing on an everyday basis some of the other bounces return. Anything that you like, even at the current levels, that you believe that investors should now at least start investing? Probably the worst maybe behind.
I think in the defense segment, I think BDL will be one stock which I'm looking. Technically, it has crossed even the 200 DMIM. Plus, there are a lot of order books been getting from last 15 days. So
Yeah.
I think BDL can be one stock. One investor should actually take an advantage of this, recovery from the recent lows, and at least 15-20% momentum from current levels. Considering again Q3 earnings will be better than Q2 earnings in this defense segment. And RVNL would be one stock. The way how government is focusing on the infrastructure again, I think RVNL will get majority of the order book into its bag, and I think that stock is very good at valuations right now. 430, 440 levels would be a good level to accumulate this stock, and I think a target of 550 can be seen in one quarter.
Okay, got that. So we'll keep an eye on these key stocks right there as well. But let's move even further beyond to see where else we can take Prashant's view in the current market scenario. Let's discuss a few other pockets within again the Nifty next 50 names. What else is interesting is maybe the stocks within the QSR and the food delivery space as well. So let's discuss VBL for that instance. Varun Beverages is one that's been continuing to be in momentum. Then we also have stocks like Zomato that continue to be in thick trade right there. Anything that you believe that towards the year end, the demand for these spaces also continues to surge with holidays coming in, more food orders coming in, celebrations around the corner, to your sense of how should one be viewing these spaces?
I think yes, Zomato as well as Swiggy both should be a part of portfolio again. Once Zomato got into the index again, the focus has shifted more towards the Swiggy as valuations. There are huge difference. I think still we have a 30-40% valuation gap between Zomato and Swiggy. And Swiggy has the new fresh money which is into its balance sheet right now, where he is going to add lot of dock rooms for its supply chain management in terms of the faster delivery of their e-commerce. I think that will be a highly watched stock for me. And if anybody would like to invest in these two stocks, I think 30% can be invested in Zomato and 70% of the portfolio can go into the Swiggy as a portfolio. So I'm bullish on both sectors as well as the QSR segment.
15 minutes left, ladies and gentlemen. We are in a sweet spot today. The Nifty facing resistance at 24,300. Call writers, they're pretty active. I don't think so we'll have an uptick beyond what we have. but let's hope that the Nifty closes above 24,270. That itself will be a very big relief. Across the board, you see good markets developing. You have the IT index now 1% higher, the Nifty 500 about a sixth of a percent higher. We haven't marked the small cap and the mid cap index since the morning. Both of them are in the green and doing pretty well. The mid cap index is up 1%, the small cap index is up 1.1%. In fact, both of them are up an equal amount. Advanced decline is 3:2 in both of them. The Nifty Alpha 50, another very strong aggressive index, is 1.2% higher. On the dipping side are the PSU banking and the Nifty FMCG index. KNS Technologies, this is 6% higher, 6345. Normally it is very difficult to take a view on that one, but we'll go with HCL Tech. This is something which is really good in terms of all-time highs and still close to that. 1.3% higher, Prashant. Would you prefer it?
Yes, I would like to prefer it. Again, the target of at least a 5 to 6% from these levels. A target of 1920 and 1940 can be a target on a technical basis. A lot of stocks today are coming out with a small bounce on a technical basis rather than any news in the sector as well as news in the stock. So HCL Tech is one, as there is a more interest in IT stocks now. A small pickup from these levels, again close above 1920 can be again another trigger on a closing basis. It can even touch 2000 for a short term.
So that's as far as the tech space is also concerned and the interesting moves that one can spot there. Let's focus a bit on some of the other unusual names that are actually pulling up in trade. Within the oil and gas space, the index is now up about 0.3%. It's IGL that's catching my attention, Prashant, with strong moves that are coming in, and it's now at the day's high point as well. What's really on the move here, and what do you garner in terms of the kind of move that we've seen today? Will this carry on? Should one focus on IGL?
I think yes, after government's interference with respect to getting into a lot of regulations and prices. So I think the discount of almost 30% from the top has been given and taken at these levels, and 340, 345 would be a good level. Again, it has consolidated from last 15 days on a technical basis. I think they have even started increasing their gas prices. That will be adding a lot of easiness to their margins. So I think stock is at a good level, but for me, a close above 370 can be a watchful level. If that goes above 370, there can be a good rally towards 400.
True. So Gujarat Gas has also now hiked the prices of CNG by 1.5 rupees per kilograms. This is after both IGL and MGL had also moved to hike the prices. So IGL increased the prices by 1.5 rupees per kilogram to 4 rupees per kilogram in different geographies, and we've been seeing all across this last week, and all of this is fueling into the momentum as Prashant really rightly points out onto that front too. Okay, so PSU banks and FMCG are now seeing some profits being taken off. They've slipped into the red, but rest of the pockets still stay strong. Real estate 3% higher, the top moving sectoral index. Consumer durables is up by 2%. You have metals nearly over by 1%. You have mid and the small caps also now up 1% each. Let's actually look at the key counters that are supporting within the small cap index. Today you have Affle India, that's up 8%, Castrol is up 7.5%, you have Intellect Design up 6.5% as well. Some of the railway space stocks like Ircon that we've been discussing, that's also up. Swan Energy, Mahanagar Gas, these are all the stocks that are actually doing very well in the small cap space. Within the mid caps also, let's pull up a few names to see where the momentum is building on in trade today. So about, let me just pull up the mid-cap winners. So we have, of course, Dixon is the top mover. That's a no-brainer. Torrent Power. You have Cochin. You have Oracle Financial Services, Godrej Properties, Prestige, Max Healthcare, Voltas. A lot of these sectoral stocks. But I think a lot of these mid-cap IT names, the unusual ones, are actually finding a lot of flavor. So Intellect Design, then stocks like Apple for that instance, Sonata Software, all of these second rung ones are actually coming back into flavor. Anything that looks positive to you within this mid cap IT, specialized IT space?
I think earlier we discussed about Happy Minds. So I think that would be the best in class stock one should look at in mid cap space in the IT. So IT as a sector that is morely focused on the US as a business. But I think large caps are moving very slow and mid caps are taking the second most advantages in terms of a lot of funds are getting interest in the mid cap IT companies. So I think that was the only reason why today a lot of IT companies are very much in action. Happy Mind would be the first stock one should look at in the mid cap space.
Policy Bazaar. This is something to be looked at. Sakshi, I think we'll have a digit change in Policy Bazaar fairly soon. And you have on the screens 1950. This is going to change a digit as far as cash prices are concerned. And let us just for a moment look at what the markets are telling us in terms of percentage high. Undoubtedly, it's trading at the day's high and record high. Yes, it's just taken out the September 20th high of 1966, and let us see how it improves. This is also the first month in which Policy Bazaar features in the FNO space, so good going, and 3.8% higher. This breakout will go places. Prashant, any view?
Rightly said, it's a breakout stock again, crossing a 2 months high. If this crosses and closes on a weekly basis, again 2000, 2100 can be a first immediate target on a trading basis. So overall, again, you said it right. As soon as it got added into the FNO space, again the insurance as a sector, I think there is still a lot of growth coming into in terms of digital insurance policies. Both on fundamental side as well as technical, I think the stock is in a new range of rally now.
Okay, got that. Now private banks are also seeing some profits being taken off, and they've now slipped into the red as well. Pressure building up on at least stocks like Kotak Mahindra Bank now within the private sector banks, but the rest of the pockets still hold up. Let's actually look at some of the heavyweight counters that continue to be in the positive zone. Let's look at Reliance Industries for that matter. It's off the day's low point for sure, and it's moved to the high point as well. It's now back above 1300 levels now, about 1.4% higher for Reliance Industries today. How are you reading into the momentum now, Prashant, on Reliance? Do you think enough is done in terms of consolidation that we've seen, be across this entire year so far? In fact, it's not given any returns to investors. Do you think that now settled, things may start to look up for this counter? Is it the best time to start accumulating Reliance for one's long-term portfolio?
Not a best time to buy Reliance at these levels. It was the best time at least 1 week back when it was almost near 1250 and 1230 levels. That was a level where no one should have been accumulating this stock for a long-term basis. But now again, everything turns to be technically again, the level should be watched again. If the stock closes above 1350, then only there can be some kind of upper tick of 1380 and 1400. So that can be a levels to watch. But overall, not a right time to add Reliance at these levels.
Okay, got that. So that's
324, ladies and gentlemen.
Yes, sir.
We are going to have a decent outing in the market today. The Nifty 140 points higher, 24,271. The advanced decline within the Nifty is fairly positive, 33 versus 17. So it's an easy 2:1. Let's look at if there are any record highs within the Nifty. I doubt it very much, but one can always be very helpful. All-time highs, none. 52-week highs, none. As far as NSE 100 is concerned, Naukri, this is a very interesting stock to look at. Please keep an eye out on Naukri. Please keep an eye out on Syngene, and please keep an eye out on Affle. All three of them had have hit record highs and have very, very strong charts, as is evident by a lot of technical inputs that are coming in at our end. NSE 200, any record highs? Yes. Policy Bazaar, Divis and Coforge from the earlier ones that I have mentioned, and of course in the NSE 500 the list is long and most of it has been discovered and talked ad nauseum. From the pharma space, Suven Pharma, 1308 at the moment, and the record high on Suven was okay, I'll tell you that a little later. But Coforge, Syngene, Divis Lab, as also Laurus Labs, these are 52-week highs. Let me just mark all-time highs. Okay, Divis is still there, 62.47. Kaplan Point, you have Syngene, Suven Pharma, and of course Kaplan Point from the pharma space. From the wealth management side, Aditya Birla, Sun Life, AMC, CDSL and CAMS. So the list is long and good. Sakshi.
Absolutely. Okay, then Prashant, do tell us how would you really advise investors to really move forward from here? What is your own expectation for this entire week and for this entire series as far as the markets are concerned? The key strategy that you would advise, short and the medium term investors also in the markets.
I would like to advise my clients to have a very technical perspective, triggers and calls, not to go with one flow the way how markets are going to end today. We may not expect tomorrow will be the same. I think evening we may get a lot of headlines from the Western countries with respect to tariff and Trump playing new headlines on that. So overall, level should be very much on a technical basis. Pharma should be one stock on a defensive side. Again, defense should be the second sector. One should focus on these levels again because of the valuation benefit. So these are the two sectors which you are focusing. In the stock specific, I am looking at JFW Infra as a stock where the trend is very much strong in terms of chart. 314, 315 is a level one can look at investing at these levels for a very shorter period of time with a target of 340 levels for a week or 15 days.
Okay, got that. We will thank you then, Prashant, for being with us on this special edition to share with us all your thoughts and ideas on the markets and the view right there that you always share with our viewers. Appreciate your time. Thank you so much for being with us. Well, definitely, the Nifty is outperforming with about 0.6% gains among the major indices. Compared to Nifty Bank, particularly 140 points higher. It's panned out to be a good day. Towards the end of the session, we did see some volumes also come back onto the Nifty, 24,275 right now. So strong moves and across the board, real estate, cement space, when we look at consumer durables, broader markets, they've all had a good showing, even the metals pack for that matter, EMS plays. There have been several pockets that have actually shown a lot of strength in today's trading session. The only fact is we'll see how it really progresses. A lot of macros, geopolitical news as well as global cues will also continue to impact the markets right there. And Shell, right, you pointed out Policy Bazaar. We believe this is going to be an important one to watch out for because 2000 could be coming in.
2005 already, Sakshi, 5.9% higher. We have 2-3 minutes left more on trade, and a close will be very, very helpful around 2000. This is one of those rare outperformers that we've seen in the internet space do exceedingly well. And I have to check this, which I will do so in a moment, as to see the top holder of Policy Bazaar in terms of the shareholding structure. I have in mind what the name is, but it is always very, very good to check before you open your mouth, because that is something that is very, very helpful. No, it's best to keep my mouth shut, and I will let you know tomorrow whether what I think is right or not. But for the moment, great showing by Policy Bazaar, record high, and this is the first month as far as the F&O space is concerned. Ladies and gentlemen, we have 145 point uptick on Nifty 50, 24,277. Nifty 500 is up 150 points. 350 point uptick on the IT index across the board, except for FMCG and PSU banks. We've seen a very nice reception, a very mature reaction to the terrible numbers that we've seen in the markets as far as GDP is concerned. And let's hope it stays this way. Advanced decline ratios is a strong 2:1, 1595 shares in the green, 800 in the red. Sakshi.
Right. Well, the screen is frozen. 24,277 on your screens for the Nifty, 146 points higher. Real estate clearly the big winner, 3% higher, 2.2% higher for consumer durables index. Mid and small caps doing very well, over 1% each. Metals shining bright with over 1% gains. Autos, pharma also nearly 1% higher. IT gained strength towards the latter half, almost 1% up. It's been a strong showing from the IT pack as well. Towards the latter half, that too with the gains coming across the large caps as well as the mid caps as well. So stocks like Emphasis, Tech Mahindra, LTI Mindtree, Persistent, all of those also contributing to the gains in this entire space. But the top winners on the Nifty, Ultratech Cement almost 4% up, Apollo Hospitals 3.5% higher, Grasim, Shriram Finance and JSW Steel as the top winners on the Nifty today, while the top laggards being HDFC Life, SBI Life, NTPC, Cipla, Britannia and HUL. So some of those FMCG names really dragging in trade today. But we'll leave you at that, viewers. Thank you so much for being with us on this special edition. We'll be back with another edition of Market Today tomorrow. But don't go anywhere. There's a lot more that you should be tracking beyond the stock market hours, and a lot more that will be coming up on your screens just shortly after. Till that time, it's a goodbye for today from both Shell and me.
Days after Mahayuti's historic victory, Maharashtra is yet to get its next chief minister. BJP leaders are claiming that the name of Maharashtra's new chief